Okay, so we're going to do a full trade recap of the trade that we took this morning. It was an A+ trade, and that's why I want to recap it because, in my opinion, it was screaming at me to take it based on my model and system. We'll start with top-down analysis, why I was even bullish going into the day. I did have a daily bias that was bullish. Told you guys at 9:15 a.m. Eastern Time, and we marked out some key levels. Why are we bullish? It's very simple. We're in all-time highs. One, yesterday had a huge wick. We're expecting higher prices, right? We're not trying to pick a top, so that's why even when we, trade higher, I'm not going to say, oh, well, the move is done now. No, we're not trying to pick a top, especially in all-time highs. So we're bullish, okay? What happens going into market open? I'll put some candlestick. That's a little bit messy. Let's go without the candlesticks. Just focus on my cursor. This is NASDAQ. Trades down into this 15-minute gap, while the S&P 500 takes out Asia and London low. This was a part of our pre-market plan. We already anticipated this SMT forming and ES taking out these lows before the run higher. So let's go back in time where we see NASDAQ trades into that discount and then see what happens. Okay. Now we'll put the chart on and all the candlesticks, whatever annotations and stuff. So this is that move down. 15-minute chart, that fair value gap, that's right here. So we take that, we can extend it out in time and see. Price comes down into there. Now, I'm not longing here. That's very important. Let's actually go back here. There's two main reasons why I'm not longing here early. One, there's no model here, first of all. So I'm not chasing this move higher saying, oh, we're bullish, I'm going long now. There's no model in this price leg. So I'm being patient and I'm not taking any trade, right? We left equal lows here and we have a lot of discount levels. I also know the opening range gap, 25% level, has a high probability chance of getting hit in the first 30 minutes. If not, even then 50%. So I'm being patient, right? That's what patience is, and just knowing what you're waiting for. Then the market puts in this high. This is engineering liquidity. That's what this high is. We purposely put this high here. So people, when they go short, and trust me, people definitely went short here thinking that we're not making all-time highs anymore. They put their stop loss here. Whether they put it there or not, it doesn't matter. The premise is the algorithm in the market will refer back to this price level because that's where the short move started from the short-term high there. So market comes down. This is what I call a double purge reversal model. We go up, down, and then reverse. We can target the engineered liquidity, and you almost always see speed through that. Why? Because it doesn't want to give these people a chance to get rid of their trade. This short right here was the most recent liquidity pool that was engineered. So these people who went short, they literally just went short like 5 to 10 minutes ago. So they want to see speed going back towards against them. If you were ever in a trade and the market immediately, very quickly speeds up going towards your stop loss, you probably were just entering on the formation of engineered liquidity. So market comes down, and now it's all textbook here, just chart patterns, 15-minute bullish fair value gap. We get the order block here. I missed this entry. Also, where's my executions? We missed this entry. There it is. We missed this entry here. The fill wasn't too good. The risk reward wasn't good. By the time we got the closure, I would have had to buy it in here. And to cover all-time high as a draw, we weren't going to make it. So I was patient. Luckily, market came back, gave me a protraction model here. Now, what did I enter off of? It's not actually on this chart. It's on this chart right here. Okay. The S&P 500 trades down, bullish fair value gap. That orange box I just drew. And then we get the inversion. So once ES pushed that inversion at 9:58 closes, I'm buying the next candle. Okay. So I got in like right here at the bottom of this candle. And then we move higher. We inverse first presentation. We take out that engineered liquidity that we talked about. And I'm not taking any partials at this point in time because I'm looking at my objective here, right? All-time high, strong drawn liquidity. 24,800. That's a whole number where the market tends to have cluster of orders. There's usually a lot of clustered orders around whole numbers in the marketplace. So we use that as a potential drawn liquidity, potential magnet. I did not leave any runners to that because I didn't need to. All-time high would suffice. So I took my first partial at these equal highs right here. And then 0.25 standard deviations. We got a pretty good fill. And then the all-time high was the final TP. And that's it, right? 24,800 was hit. This is all pre-market annotations, by the way. And this was arguably an A+ trade. It was also inside the macro. We got below midnight. We got below 8:30. We got below 9:30. We had an SMT, discount levels, and this was all a part of the pre-market plan, which was high probability longs. This could mean from London discount or sell side liquidity, right? This right here, this is London discount, right? Discount of London range. That's all the way down here. And we took out the low on ES. So we had the sell side plus the discount. And that's pretty much everything about this trade. 2 minis on the eval, 2 micros on the funded. You guys know I don't like to risk that much on my funded accounts. Pretty much, yeah, I think that's everything I want to talk about. I can post a little clip of the live trade here.